Good evening. Thanks very much for joining us on India Business Hour. I'm Shireen Ban. Straight to the top story tonight. The central government has expanded its borrowing plan for the current fiscal year. Now, the estimated gross market borrowing in FY21 will be 12 lakh crore rupees, and that's a significant increase from the budget estimate of 7.8 lakh crore rupees. The revision in borrowings has been necessitated on account of the COVID-19 pandemic. Lata joins us now to help us understand what the implications of this higher borrowing plan will be and where this could leave the fiscal deficit. And Lata, one must not assume that this is the kind of stimulus that will come our way, because this could also be factoring in the revenue hit.
That is how economists have understood the borrowing program. Almost everyone is working on the assumption that GDP growth at best will be flat. Now, if I take you to the India budget of February 1st and even, the revised numbers, it is a 224 lakh crore GDP number that the budget was working with, which is, provided you assume, approximately a 10% growth in nominal GDP. But 10% nominal GDP now is impossible. Actually, you will perhaps end up having a lower GDP. So if you take, as you said, a base case of same GDP as last year, then we land up at a 6% GDP. But the government, of course, will argue that growth will return in the second half. The other important point to note is, as growth contracts, taxes will contract. We have almost every economist in the country assuming a 1% of GDP fall in tax collections. That would be 2 lakh crore. And the borrowing, the divestment program of 2 lakh crore also being extremely difficult to go through. So if you add the 2 lakh crore divestment and the shortfall of 2 lakh crore expected in taxes, that kind of is met by the increase in government borrowing of 4.2 lakh crore. Hence the assumption that we can't as yet assume that a fiscal stimulus has been announced.
Is it enough? Because, if you look at any estimate of what has happened already to date in the current fiscal, which is, about 6 weeks have passed, the economy itself has lost about 12 lakh crores. Okay. So an additionality of 5 lakh crores means that the fiscal stimulus that you're talking about at the moment, and this is annualized, I will presume, is going to be less than half of the damage already done.
The market may actually think, is this stimulus enough, right? So that's where it's very important right now to actually get FM to do a press conference, spell out what are their plans, how they intend to do it. Is this the only stimulus package they are looking at it? I think they're going to look at a lot of things, because with this kind of damage, this stimulus may not be enough for market to be happy. But at least there is something which is there. But again, what is that they are laying out? That's very crucial.
Markets have been waiting for some sort of this announcement. It was tending to be like the boy who cried wolf, and every time the markets expected borrowing, it wasn't really happening. So I would say a knee-jerk reaction is inevitable when markets open for trade on Monday morning. We have a very short trading window, just 4 hours. So that will also likely spook sentiment.
Well, reactions there coming into the government's increased borrowing plan. No communication from the government on what it intends to do or what this is for specifically, except to mitigate COVID and the response on account of that. Now, the big story tonight, US-based private equity firm Vista Equity Partners has picked up a 2.32% stake in Jio Platforms for over 11,300 crore rupees. Now, this is Vista's first India investment and the third high-profile investment in Jio Platforms in less than a month, following investments by Facebook and Silver Lake Partners. As a result, Jio Platforms has now raised over 60,000 crore rupees in less than 3 weeks. The Vista deal has been struck at a 12.5% premium over the Facebook deal and pegs Jio Platforms' equity value at 4.91 lakh crores. Its enterprise value is pegged at 5.16 lakh crore rupees, and this makes Jio Platforms the fourth largest Indian company in terms of market cap after Reliance Industries, TCS and HDFC Bank.
I would say that, this is just appropriate because it is only these investors who have deep understanding of how to leverage technology and create value out of an economy, who would be able to place these kind of investments. So it's a solid endorsement of the Jio platform.
One of its many strategies of Reliance is how does it leverage its retail business, where it's now got a commercial agreement with Facebook to reach a significant share of the $900 billion unorganized retail market. At the moment, Reliance is a 25% share of the organized $100 billion market. And this significantly gives it a leg up to actually potentially capture that opportunity.
The big story coming in there with this latest deal that's been inked by Jio Platforms is the fact that this is now emerging as India's consumer tech bet. Joining us to discuss exactly that is Vani Kola, the founder and MD of Kalari Capital. Vani, many thanks for joining us. Facebook, Silver Lake, and now Vista getting on board to Jio Platforms. And I know that you've been bullish on the Indian consumer tech story, and this validates and legitimizes the Indian consumer tech story. What do you make of these three mega deals in the last 3 weeks and what it means for India?
Well, I think that Jio deal can't be taken as a benchmark because it's such an unusual deal. No Indian company has done this before. And even in global markets, this is a deal to really take note because of the unusual nature and the timing, right? And so it is, I think the question of does that mean funding will open more broadly to Indian consumer tech companies? But before we think about that, I think there is a lot of power to this deal in terms of how fast the Indian digital story and how competitively it will now get played out. And there are a few shifts in what was and what will be. There is a power shift to platforms. We have seen that in US. Of course, we have seen that in Asia, whether that's WeChat, Gojek, super apps that have come into play because the consumer cost on a digital platform is so high. If you have a consumer, how do you ensure that you're more deeply integrated into the consumer from a multiple levels, from wallet to products to services? And what that would mean to me with a mega deal like this, and one of probably the most largest significant platform that will emerge for India or has emerged for India, is there's also a new era for M&As. And I think there will also be differences in how startups get funded. I think this is great story for the consumer. And I think for startups, we will see a very different kind of startup environment that will evolve. I also think this will accelerate along with what has happened, unfortunately, from our whole COVID situation globally. But there is a different consumer behavior when we talk about the new normal. And I think that also helps this digital consumer tech solutions and especially larger platform place, whether it is from sort of groceries to home services to work from home to everything. I think there is more focus on consumer tech, also meaning home tech. So I think for new companies to compete, they'd have to think about how they interoperate with this large platform, which now has set up a very different competitive benchmark.
Yes, and you're right to point out that this is an unusual deal and it should not be read as a benchmark for the Indian ecosystem or for valuations for consumer tech companies in India necessarily. But just on the back of the investors that have come on board for this particular transaction and for Jio Platforms, as well as the link to the Valley, Vani, through this transaction and these deals that have happened on the Jio Platforms, what does that tell you in terms of cementing that link, perhaps?
I don't know if I see it that way, honestly, Shireen. I see it as India is has been a very interesting country for almost every Valley company, but not many of them have really learned how to make revenue in India, right? And I think what this says is that India consumer story is really strong. India opportunity is really very strong. that you need local partners in order to deeply penetrate aggressively in a way that you can make revenue. That really is how I see it. Whether that's the Facebook story or from Silver Lake, of course, which is more a large fund, and Vista supporting this, says that India consumer opportunity is real, but it's not just simply about small companies very quickly trying to get big. It's big companies becoming also very bigger, able to pivot, right? And that is really, this is the world's biggest pivot that we have seen and entrepreneurial endeavor that we have seen live. So to me, I think it's less about the valley, but more about money, global money, trying to leverage and capitalize on the India opportunity.
All right, Vani, we'll leave it there. Thanks very much for joining us here on CNBC-TV18. Vani Kola there of Kalari Capital. And of course, the standard disclaimer, Reliance Industries is the owner of Network 18. At least 16 migrant workers were run over by a cargo train in Maharashtra's Aurangabad district early this morning. They belong to a group of around 20 workers from a steel plant in Jalna who were walking to Bhusawal to board a special train to take them home to Madhya Pradesh. They had fallen asleep on the tracks. A statement issued by the railway said that the motorman tried to bring the train to a halt but failed to control the speed in time. Prime Minister Modi said he was extremely anguished at the death of the migrant workers and that Railway Minister Piyush Goyal is monitoring the situation and would provide the assistance required. Maharashtra Chief Minister Uddhav Thackeray has announced a compensation of 5 lakh rupees to the families of the dead and urged migrant labourers not to risk their lives. He's also said that more trains will be run to take stranded migrant workers to their home states. Madhya Pradesh Chief Minister Shivraj Singh Chauhan has also announced a compensation of 5 lakh rupees to the families of the deceased. As states have started to ramp up testing in India, the number of reported cases have also seen an increase. 3,561 new cases have been reported in the past 24 hours, taking the total number to over 56,000. The number of patients cured or discharged has also seen an uptick and currently stands at 16,539. A total of 1,886 people have died from the virus so far. The recovery rate is at 29.36%, which means nearly 1 out of 3 hospitalized patients has been discharged. The rate of recovery has been on a steady increase over the past week. Out of the cases under the active medical supervision, 3.2% are on oxygen support, 4.7% are in ICU, and only 1.1% are on ventilator support. So it's important to look at these numbers in perspective. A rise in cases is also being carried forward with a rise in the recovery rate at this point in time. Now, here are some of the other headlines that we're tracking this evening. In a major bureaucratic rejig in Maharashtra, the BMC Commissioner Praveen Pardeshi has been transferred to the Urban Development Department as Additional Chief Secretary. He has been replaced by Iqbal Chahal, who held the post of Principal Secretary in the Urban Development Department. Samsung, Oppo and Vivo reopen mobile factories in Noida. Samsung gets permissions to restart the largest smartphone factory. Xiaomi plans to restart operations at the Foxconn facility in Andhra Pradesh in 6 to 10 days.
Our partner Foxconn factory in Andhra Pradesh has received approval. Slowly and gradually, we are also seeing approval coming for other factories, like the Flex factory in Tamil Nadu has also received approval. But all these factories are not open right now. Let me clarify. They have received approval. We are trying to get manpower. There's a restriction on the number of manpower that can be inside and number of shifts that we can operate. We are hoping that in next 8 to 10 days, factories can start working with small number of people while maintaining taking all kind of precautions and maintaining social distance.
Well, that's Manu Jain of Xiaomi restarting operations soon. Indigo announces pay cuts in the form of a graded leave without pay program for the months of May, June and July. Level A employees who form a majority of the airline's workforce will not be impacted. Coming up next, Madhya Pradesh and UP ease labour laws for 3 years. What does it mean for workers and industries? More on that when we get back. Uttar Pradesh and Madhya Pradesh have scrapped several labour laws for the next 3 years in a bid to provide succour to industries affected by the COVID lockdown. Specifically, UP, India's most populous state, one that is home to over 7 lakh migrant workers, has exempted businesses from all but 4 labour laws and one provision of another act for the next 3 years. Rituparna Bhuyan joins us now with more details. Ritu, take us through the changes announced by both states.
Uttar Pradesh and Madhya Pradesh have suspended most of their labour laws. Let me take you through what Uttar Pradesh has done. According to a cabinet approval that was done by the state government in UP, most of the labor laws have been suspended for a period of 3 years. There are only 4 labor laws which will now be applicable in the state of UP, which are basically Building and Other Construction Act, the Workmen Compensation Act, the Modern Labor System Act, and Section 5 of Payment of Wages Act. So that has been what has been done in UP. In Madhya Pradesh, here again, most of the labor laws have been suspended for a period of 1,000 days for a specific act, that is the Factories Act of 1948, that has been suspended for 3 months. Now, what does it mean for the labor who will be working in these units? The state and the central labor laws, which are applicable in both UP and MP and in other parts of India, they protect the rights of the workers regarding some very basic issues. For example, the factory owner, as per these laws, have to ensure that there is enough cleanliness in a factory premise. There has to be enough ventilation. There has to be enough light. There has to be first aid boxes. There has to be safety equipment that has to be available. There has to be creches. There has to be canteens. There has to be drinking water, something as basic as drinking water. These are all mandatory as per the state and central labor-related laws. Because of the suspension of labor laws by UP and MP, these very basic facilities which were mandatory now have now become optional for the factory owners to provide. And as a result, a lot of concern has been expressed in various quarters, especially by trade unions across the spectrum, that labor-related rights will be violated because of the exemption that has been provided, the suspension that has been done as far as labor laws are concerned in both Uttar Pradesh and Madhya Pradesh. With that, it's back to you.
Thanks very much, Ritu, for joining us with those details. We're now joined by Professor K.R. Shamsundar of Xavier School of Management to help us understand this. Professor Sundar, many thanks for joining us. Sir, for the last 15-odd years, we have repeatedly heard the clamour for reforming labour laws. Now, the code, currently 4 codes are under study. Parliament is looking at it. Standing committees have been asked to look at those. One has been taken forward by the central government. In light of the ordinance passed by UP and MP, one view is that this is going to make it easier for companies to actually get on with doing business. It will provide the much-needed ease of doing business. The other view is that this is, in fact, going to undo a lot of the work that was done to protect the rights of labour. Where do you stand on this?
Yeah, I should also start by saying that the entire edifice of labor rights, construction of the edifice of the labor rights dates back to 1881, when the first Factories Act was enacted thanks to the pressure exerted by the Lancashire mill owners. And then it flowed, and then 1948 we had the Factories Act and so on and so forth. So it is not only a matter of 70 years, it is a matter of more than 130, 140 years. Now, it's true that the labor law reforms are necessary to enable business to thrive, but the kind of reforms that have been advocated at the central level through the 4 courts, they do not appear to be very encouraging. Because firstly, the 4 labor codes, I mean, one has been passed but yet to be notified, that is a wage code. Yeah. But the remaining 3 codes, which is on social security and IR and industrial relations and occupational safety and health, they leave a lot to be desired. It appears to be a copycat paste rather than labor law reforms. They help neither the employers nor the workers, and in the process have introduced some of the labor law reforms that the employers have been lobbying. But to put it in a scientific context, as an academic, I must inform your viewers that labor law rigidities have been magnified beyond its worth. On a scale of 1 to 10, labor law rigidities will be there somewhere on the 9th or 10th score. In fact, the ease of doing business, there are other factors such as availability of skilled person power or infrastructure facilities, enforcement of contracts, and all those things. Yeah. So I think labor law reforms, the way the employers are asking and the way the central government and now the state governments are responding, they seem to be in an unholy hurry to curtail historically won labor rights. And I think
sure.
this is...
But Professor Sundar...
Yeah?
Yeah, I get the concerns that you're raising, but Professor Sundar, the fact of the matter is that, as you yourself pointed out, a lot of these acts, a lot of the legislation dates back more than 70 years. A lot of these provisions have outlived their utility. So do you not believe that as we review this process, while we do put the safeguards and the checks and balances in place, there are provisions which need to be axed, which need to go?
I do agree. I do agree that labor laws need modernization as... sorry. The labor law...
Go ahead, sir.
The labor law reforms are needed in the sense that now we are looking at a globalized economy and the laws that were formulated during the command economy during the command economy needs to be modified. But I am not happy with the way the processes of introduction of labor law reforms. I must tell you that India has ratified several of the ILO conventions, and primarily ILO Convention C-144, which is a tripartite consultation of international labor standards, which require the union government and the state government to consult the stakeholders, which are primarily trade unions and industry bodies, before announcing any kind of labor law reforms. But none of the courts have been preceded by effective social dialogue. If effective social dialogue is conducted, yes.
Unfortunately, we're running out of time, Professor Sundar. We'll get you back and do a much more meaningful discussion on this issue, which is going to be a crucial issue. But thanks very much for joining us here this evening with a very quick reaction to the changes that have come in UP and MP with the labour laws. With that, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching. Do stay tuned. A lot more coming up.